Hi, Kitty. Thanks for having me.
Good to have you. So, Carl, this was an extended hearing with the California Department of Insurance. State Farm claiming that they need an immediate rate increase. Can you tell us how this hearing wrapped up?
Yes, for sure. It was a crazy few days of hearing up in Oakland. So let me give you just an update about the three parties. Of course, we had State Farm that was there, and State Farm was making the point that this is a financial emergency due to losses, particularly from the recent wildfires and other major losses that were happening. They need an immediate interim rate increase to remain solvent. They warned that without an immediate rate increase, even another credit rating downgrade is likely, which could force hundreds of thousands or more of people to lose their insurance, or people that have mortgages to have their banks start calling out the loans because they won't accept State Farm's policy as being substantial enough.
So what was the response from the Department of Insurance?
The Department of Insurance agreed. They believe that the 17% increase is justified at this point, and they also pointed out that State Farm was willing to say that in the event it turns out that they do not need to have this much of a rate increase, they will refund the rate increase plus interest to their policyholders, so no real downside. That's their position. And finally, the Watchdog folks claim that the interim rate increase is not legal. They argue that State Farm failed to meet the legal requirements to prove it, and they said that a company's financial hardship cannot be used to justify a rate increase.
Yes, and Carl, to your point about Consumer Watchdog saying that financial hardship can't be used to justify rate increase unless there are some specific legal procedures followed, and we read that State Farm they said that State Farm had waived the relevant legal claims that would have allowed that consideration.
Yes, and they accused State Farm of utilizing